Hello everyone, my name is Dan, and in this video I will show you all how to refine order blocks in order to increase your risk to reward ratio exponentially and maximize your profits using smart money concepts. So if that sounds interesting, let's get right into it. Alright, so I will go over a step-by-step guide that you will be able to follow in order to refine order blocks from the higher to the lower time frame and therefore increase your risk to reward ratio exponentially. So after you watch this video, you should be able to get more sniper entries that you were getting before. Okay, so make sure to stick till the end to not miss out on any of the tips I'm about to share with you all. Okay, so let's start. Me personally, I like to look for order blocks on the 4-hour time frame. The 4-hour time frame would be my main time frame. Now, of course, you can go ahead and have a different main time frame. You can, let's say, have the 2-hour as your main time frame and then drop lower to refine your order block. You can have the daily as your main time frame and then drop lower to refine your order block. But me personally, I like to use the 4-hour, and that's exactly what we are going to use for this video. Okay, so I'm gonna use the recent price action that gold presented, okay, for identifying some order blocks and then refining them on the lower time frame. But first things first, let's go over our plan right here. Okay, so yes, we can trade order blocks on a higher time frame like the H4, but the stop loss will be big and the risk to reward will be small. And that's exactly the issue that we will solve in this video, okay? Because yes, of course, we can trade order blocks on the higher time frames like the 4-hour or even the daily or even the weekly, right? But because we are trading on those higher time frames, the parameters will be huge. The stop loss will be huge and the risk to reward will be small because of the higher time frame. So we have a very simple solution. We will refine the order block on the smaller time frames and therefore get a bigger risk to reward ratio. Okay. Something very important to note. That's personally something that I follow, okay, to not get too much noise. We won't drop more than 3 time frames from our main 4-hour time frame, okay? So let's say we have the 4-hour as our main time frame, we won't drop lower than the 30 minutes refine, because I know some people that would go super crazy with this. They will start on the daily and they will refine their order block all the way on the 1 minute, okay? Me personally, I'm not a big fan of that, okay? So I only like to drop down 3 time frames and that's it. Okay, so let's say the 2-hour is your main time frame. The lowest time frame I would personally drop to would be the M15. Okay, so this rule right here is, in my opinion, very important because it could get too noisy and therefore we will also have a very small win rate because we just want to refine too much and think that we will get a huge risk to reward. Yes, that's the case, but the win rate will be super small. Okay, and then of course we will discuss about some pros and cons. But now let's go on this chart right here and look for some examples. But before we do, I just wanted to let you know that if you want to see the SMC trades I am taking every single day, you can do that by joining my SMC trading group. It is the first link down below. Feel free to check it out. Okay, so right here we had some bearish price action for the past couple for the last 3 to 4 weeks, I would say. Okay, so we can see that we are constantly breaking lows. We started to reverse here and then we continuously went lower and lower. Okay, so it's safe to say that gold is in a downtrend. All right, now knowing that, I would look for a bearish order block. We could name it a bearish order block or a supply level, really, because essentially they are pretty much the same thing. Okay, a order block is essentially the last bullish candle before a very impulsive move to the downside. Okay, that also created inefficiency. Okay, we always need to look for inefficiencies, for imbalance. Okay, so right here, check this out. This right here would be a valid bearish order block or supply level. Okay, why? Because this was the last bullish candle before this super impulsive move to the downside that broke structure. Okay, so it was an impulsive move to the downside. Okay, it also broke structure and it also left inefficiency behind. It also left imbalance behind. So for me, this right here is a valid order block. Okay, if I don't have all these 3 in place, that's not a valid order block for me. If I don't have a inefficiency, that's not a valid order block. If I don't see a impulsive move, that's not a valid order block. And if I don't see a break of structure, for me, that is not a valid order block. Okay, so I always need to watch out for those three things. Okay, inefficiency, break of structure, and impulsive move. All right, and then if I look to the left, there will be another valid order block right here, this doji candle. Okay, why, you might ask? Well, let me zoom in. Let me zoom in for you and tell you exactly why. So if I zoom in, you will see very closely that there is inefficiency. Okay, the low of this bullish candle doesn't overlap with the high of this bearish candle right here. Okay, so we created imbalance right there, and this would be a valid order block. Why? Because it was the last bullish candle before this impulsive move to the downside that A, broke structure right here, okay, and B, left imbalance or inefficiency behind. Okay, so for me, these two order blocks right here are very valid. Okay, let me try and show you an example of an order block that I wouldn't personally take. Look right here, okay, so check this out. This bearish candle right here, okay, you could say that this was the last bearish candle, or this one right here, this small one, before this aggressive push to the upside. And yes, that is totally correct. Okay, and we have 2 out of 3 confluences in place. We have an impulsive move, okay, that's very clear to see, and we also broke structure right here. Okay, so the third one would be the inefficiency, but because we have no inefficiency, I wouldn't consider this order block. Okay, so I just wanted to quickly go over and show you all what I look for in a order block. Okay, what I consider, what I need to see in order to consider, okay, this is a valid order block or this isn't a valid order block. And for me, these two right here are very valid. Okay, if we look closely, right here, this is also a valid order block, but unfortunately price didn't mitigate it right there. And if we look closely here, I don't really see any other valid order blocks, okay, in this recent price action. So let's stick to these two examples. Okay, so we have this first one right here. Let me use the bar replay real quick. Okay, we have this first one right here. So we have everything in place. We broke structure, we had an impulsive move, and we also have inefficiency. So this right here would be a valid order block for me to trade. Okay, so I would be happy to place a sell limit on this order block. Okay, I could place a sell limit, stop loss right above it, and take profit. I could target this most recent low. And this would be a very nice 1-to-4 risk to reward ratio only on the 4 hour. Okay, this would be a very nice 1-to-4 risk to reward ratio. But this video is about refining. So let's go lower. Let's go on the 2-hour time frame. Okay, and on the 2-hour time frame, we can see that we could refine our order block to this 2-hour order block right here. Okay, so this could be our new entry. We could refine it right here, stop loss right above the 2-hour order block, and then the take profit would be the same. Okay, so we can see that we now have a 7R. We now have a 7R risk to reward ratio. Okay, we have a 7R target instead of a 4R based on the 4 hour. And then we can take it one step further. We can go on the 1 hour. And on the 1 hour, there's no valid order block here. Okay, why? Because this one right here, okay, has no inefficiency. On the 2 hour, it had a inefficiency. Okay, we can see that there's a huge imbalance after this candle formed. Okay, we can see a huge imbalance when the price decided to push lower and break structure. Okay, so on the 1 hour, there's no valid order block, and the last time frame would be the 30-minute time frame. Okay, that would be the last time frame, because like I said, we will count 3 time frames: the 2 hour, the 1 hour, and the 30-minute. The 30-minute would be the lowest one I would go to. Okay, and on the 30-minute, we can see that we have another order block. Okay, this one is very valid, this 30-minute one. Okay, because look, after this doji candle, the price decided to drop very aggressively to the downside and also leave inefficiency behind. Okay, we can see we have very clear imbalance. Let me quickly zoom in for you all so that you can see clearly what I'm talking about. Okay, so we have a super clear imbalance right there. Okay, so we could place the sell limit on the 30-minute order block, which would be this one right here. Okay, so let's see what a risk reward ratio we would have on this 30-minute refined order block trade. Okay, so check this out. We would have a 18R trade. Okay, so from a 4 hour that we had on the 4 hour, we then refined on the 2 hour for this one right here, which was the 7 hour, and then we took it one step further and we went to the 30-minute as well and refined it there to this order block right here. And now on the 30-minute, we have a potential 18-hour trade. Okay, so this is exactly how we refine a order block and how we can increase our risk reward ratio exponentially. Okay, so now let's play the price and see what happened. Okay, so right here, the 4 hour trade would have got triggered. Okay, would have run in profit, and now both of the 2 hour, both the 2 hour and the 30-minute trades got triggered as well. Okay, so we can go on the 30-minute. Let's quickly remove the 4 hour trade to have a better look at the 30-minute and the 2 hour. So the 2 hour is right here. Okay, triggered, it's running in profit, but also the 30-minute. Okay, so let's delete the 2 hour as well. Check this out. Check what a reaction it had on the 30-minute order block. Okay, perfect reaction, and now we are running in profit. Okay, now we are running in profit, and we can play the price. Oh, it almost stopped us out there, but it didn't. And then check what happened. Okay, check what happened. Take profit smashed, and this was a 1:18 risk to reward ratio trade. Okay, so if you would have risked $1,000, you would have almost made $2,000 in one single trade. Okay, $1,800. Okay, refining order blocks from the higher to the lower time frame. Okay, so that's what I meant by you getting more sniper entries, because if you master this, then trust me, you will get a lot more sniper entries and you will get a bigger risk to reward ratio. But now let's not get carried away and talk about the pros and cons as well. Okay, so we already established that the massive pro would be that we will get a much higher risk to reward ratio, and we already saw that. Okay, we already saw what this is capable of. Instead of having a 4R, okay, based on the 4 hour, we had a 18-hour risk to reward ratio trade because we refined it on the smaller time frame. But now we also need to understand that there will be a big con as well. Okay, refining order blocks on the smaller time frame will also mean that you will have a smaller win rate. So you have to be okay with that. Okay, you have to be okay with having a smaller win rate, because you cannot have the same win rate as on the higher time frame. Okay, when you are refining on the smaller time frame, you will have a much bigger risk to reward ratio. Yes, that's correct, but you will have a smaller win rate. Okay, so you need to be okay with that. If you're not, then I would suggest you to stick only to the higher time frame. And B, you also need to understand that sometimes you might miss out on some trades. Okay, and let me tell you exactly what I'm talking about. So let's quickly delete this these drawings. Okay, and we were talking about this second example right here of this 4-hour order block. Okay, so check this out. This would have been the 4-hour trade. Okay, the sell limit right on it. Once again, respects all the confluences. Okay, we had an impulsive move that broke structure, and it also left imbalance behind. So all three confluences are in place. We would have aimed for this low right here, which was a 2.5R on the 4-hour. Okay, so let's play the price. Let's play the price and see what happens. Okay, so we would have got trigger right here on the 4-hour, but let's see what would have happened if we would have refined our order block. So we would have refined it on the 2-hour time frame, on the 1 hour. Okay, pretty much was the same thing, and lastly on the 30-minute. And on the 30-minute, it would have been this one right here. Okay, for a much bigger risk reward ratio once again. So based on the 30-minute, we would have had a, let me quickly see, we would have had a almost 11 risk to reward ratio instead of 2.5R. Okay, that's the risk to reward we would have had on the 4-hour. On the 30-minute, we would have had 11R almost. Okay, but check what happens. Let's see what happens. Okay, so let me play the price. We are running in profit, and boom, targets were smashed. And check this out, our trade didn't got triggered. Okay, so this is again another con that you need to be aware of. You need to understand that if you refine the order blocks on the smaller time frame, a lot of times you will miss out on the trade. And once again, you have to be okay with that. Okay, so you will have less trades. Okay, you will have a smaller win rate, but you will have a significantly increased risk to reward ratio. Okay, so it's pretty much a balance. Okay, you have to have a balance, and it's no difference here as well. Okay, so you need to ask yourself, Do I want a much higher risk to reward ratio? Because if you do, then go ahead and refine the order blocks. But of course, make sure to backtest before jumping on a trading account. That's my personal advice. But at the end of the day, do whatever suits you best. Or B, if you want to have a higher win rate and more trades, then stick to the higher time frame and trade only the higher time frame, as we can see right here. Okay, so these are the questions you need to ask yourself. Do you want more sniper entries? Then go ahead and refine them. Do you want to have a bigger risk to reward ratio? Then go ahead and refine them. But if you want to have a bigger win rate and overall more trades, then stick to the higher time frame. Okay, and this is exactly how to refine order blocks in order to increase your win rate, your risk to reward, your risk to reward ratio exponentially and get more sniper entries. Okay, so please make sure you are subscribed to not miss out on future uploads like this. And if there's any questions, make sure to drop them down below. I'll make sure to check every single comment out, and feel free to leave any feedbacks. That will be very much appreciated. And if you found this video valuable, feel free to share and like it. Feel free to share it with your friends, and also leave a like. Once again, this will also be very appreciated. Until next time, a very cool in-depth SMC trading strategy video will pop on the screen right now. So make sure to go ahead and check it out. I'm really curious to see what you will think of it. And that being said, I want to wish you all the best and take care.